Hello friends, here we'll discuss the advanced business and the financial management module A, the management process. First unit, basics of the management, part 3. So see, introduction to the strategic management. So what do you mean by strategic management? See, banking industry is the backbone of the financial sector, and the Indian banking industry has witnessed the several stage of growth over the time. The growth has been exponential since the nationalization of the bank, liberalization of the Indian economy in the early 1990, and the entire private sector banks also have been boosting their growth post liberalization. Okay, so here what I have to say, we have to discuss here simply see how the banking industry has been witnessing the strategic management. Post C, previously the public sector bank were dominating. After the liberalization and the globalization in a 1991 reform, the license were given to the private sector banks, right? And after that, ICICI, HDFC, Axis, this bank got emerged, and they have started dominance in the market. Okay, now see, the private sector bank from the beginning had adopted a technology driven model and have been quite aggressive, right? You all are aware how technology they are using, right? So in 2021, the public sector bank constituted 59.9% of the total asset of the scheduled commercial banks. Private sector banks have 32.8 and the foreign banks have 6.5. So small finance bank have 0.8% of total asset whatever we are having if we consider only the scheduled commercial banks. Okay, so this figure gives you an idea, right? This figure you will able to understand the contribution of the different banking sectors, right? For example, public sector banks, private sector banks, or the foreign banks or small finance, so how much they have contributed, right? What are their asset means basically the loans, how much they have contribution in the loans. Okay, this is the data as per 2021. Okay, now see, the strategic management has been, is, and will continue to be the key driver for shaping the banking operation. So why this happen? The main reason is strategic management. So what do you mean by strategic management? So simply you should have some strategy. If you are doing something, you should have some strategy. And strategic management means you should plan what you have to do, and you should consider the environment. The most important is environment. What environment you are having? It may be the surrounding, it may be the technology, right? It may be the competitiveness in the market, it may be the competency, right? So this all come to know, this all will combine to the strategic management. Now see, strategic management, how we can define the strategic management? The word strategy comes from the Greek word strategios, which means the general view. Strategic management is defined as the process by which a firm manages the formulation and the implementation of its strategy. Simply, strategic management means what? Where a company manage what? The formulation and implementation of strategy. Strategic management means you have to make the strategy and simply implement it. That is the strategic management. Very simple, right? In other words of Andrew. So according to the Andrews, corporate strategy is the pattern. So according to the Andrew, see here, corporate strategy is a pattern of decision in a company that determine and reveal its objective, purpose, goal, produces the principle of a policy and plan for achieving those goals, and define the range of business in the company is to pursue the kind of economic and the human organization it is or intend to be, and the nature of economic and non-economic contribution it intend to make its shareholder, employee, customer, and the community. It defines the business in which company will compete, preferably in a way that focuses resources, convey distinctive competency into the competitive advantage. So basically, this is the view of Andrew, right? But see, in simple word, you don't need to worry about the view of the Andrew. Lot of big definition. Okay, what do you mean by in simply? Strategic management means simply the process. It is simply the process by which you prepare the strategy and you implement that Okay, and that combinedly you can say it is strategic management. Okay, so simply now see here, the a study of a definition shows that strategy combine explicit statements and the implicit belief and understanding in and around an organization. So basically, what do you mean by strategy? What do you mean by strategy? Strategy, if you have some, if you know the mission, if you know the vision, if you know the clientele, if you know the resources and present and future, then you are having the strategy. Got it? Now see, mission. It's a core purpose. What do you mean by mission of a company? So what is a mission? Mission is a core purpose. What is my core purpose? Right, that is my mission. And how, if at all, its mission will change in future. Okay, so what is the mission? Mission is nothing but the core purpose. The core purpose of the business is nothing but the business. And how, if at all, its mission will change in future. So not necessary, mission may change in future, but what do you mean by mission? See, if you visit any company website, there will be written our mission, our vision, right? So what do you mean by that? Mission means the core purpose of that company. And what is the vision then? Vision is nothing but an image of the company's future direction and what it intend to achieve. Okay, so mission is nothing but the core purpose, and the vision is nothing but what you supposed to be achieved, right? So what is a clientele? So it's a scope, meaningly it is many clientele now and those in the future. Clientele means what? How much the client simply it is a scope. So for a company or for a bank, what is the clientele? For a bank, number of branches bank is having, the number of customers. Okay, so this is what a clientele means. What it is, just a scope or all around surrounding. It is the all around surrounding, that is nothing but the clientele. So for a company, I will say it's number of clients. If you combine all the clients, you can simply refer them clientele, right? So clientele means simply all surrounding whatever you are having, right? For a bank, then we can say number of branches, number of customers, number of accounts. So these are the clientele for the banks. Okay, so clientele means it's a scope, right? So what is the resources? Simply the resources and the competence and the competences that create the value for its clientele, and how this will or must change to maintain the enhance the future value created. So obviously you should have some resources, and that resources should be utilized for the value addition in the company. Okay, apart from that, that should create a value to the clientele means all surrounding clients, all clients simply, right? What is the present and future? The foundation of its present competitive standing and the future sustainability. So if you are clear what is the present of your company, what will be the future of your company, then you can say you are having the strategic management. Got it? So what I have to say, if you know the mission, if you have vision, if you have clientele, resources, and the present and the future, if you know about your company, that means you combinedly you are talking about the strategic management. Hambrick and the Fredrickson define the strategy. How the Hambrick and the Fredrickson define the strategy? The central, integrated, externally oriented concept of how a firm will achieve its objective. So basically strategic management. So obviously the ultimate aim is to achieve the objective. Okay, so strategic management or the strategy, here we are talking the strategy. So what is strategy? So you see, what is your strategy to pass in the exam? What is your strategy? I often call, right? So strategy is nothing but basically you do something, right? So strategy is the way of achieving, right? So it is a central, integrated, externally oriented concept of how a firm will achieve its objective. Now, according to the Alfred Chandler Jr., suggests a strategy as what? The determination of the basic long-term goal and the objective of the enterprise, and the adaptation of the courses of action and the allocation of the resources necessary for carrying out the goal. So obviously again you should have some goal. It may be a long term. Okay, it should, and that's to achieve that goal you should have some course of action and obviously using the resources. So simple definition, right? That is the strategy. According to the Porter, it relates strategy to a success of the company. Okay, so remember here is the exam point of view. Okay, here Porter, so there will be a question. Porter relates strategy to dash of the company, success of the company, management of the company, failure of the company, profit of the company. Okay, so in this way you can expect. So Porter relates the strategy to success of the company, and according to the Porter, obtaining a competitive position or the series of a competitive position that lead to superior or the sustainable financial performance. So obviously it relates to the success. So Porter relate the strategy to the success of the company. Obtaining a competitive position or the series of a competitive position, that means you should be competent in the market, right? That lead to superior. So obviously if you are competent, then you will obviously will be the superior in the market. And if you are competent, if you are superior, then obviously you will have the sustainable financial growth. So sustainability obviously you will increase, right? So sustainable financial performance definitely will be there. If you are competitive, if you are superior, then obviously you will show sustainable financial performance. Okay, now to conclude, we may say that the strategic management involve those decisions and the action of the management that determine the long-term performance of the entity. Okay, so strategic management means what? Simply decision plus action. Simply it is a strategy, and implementation of it for what? Long-term perspective of the business is nothing but the strategic management. Now see, what do you mean by, what is the difference between plan and strategy? So you don't get confusion. So if you look broader, you will say, sir, there is no difference. Plan and strategy, how can I make difference? But here you have to understand the difference between the plan and strategy. So plan is the arrangement. What is plan? It is the arrangement, or it is a pattern, or it is a program or a scheme for definite purpose. So for example, plan. So you plan accordingly. Plan means what? Suppose for example it is having definite purpose. Suppose you have study plan. Okay, what is purpose? To pass in the exam. Definite purpose. A plan is very concrete in nature and does not allow for a deviation. For example, you plan to go on a marriage, and marriage ceremony is on 15th. Okay, but it is concrete, you cannot change the date which is already fixed, right? So plan A doesn't work, you don't alter plan A and try again. Rather you move to the plan B, which may totally different. So if you are not able to reach on time in the venue, what you do? You will go to the reception of the marriage, which is on next day 16th. That means you are having plan B, right? But you cannot achieve plan A, right? So simply, what is a plan? Plan is a very basic thing you have to remember. Plan is the having definite purpose. Purpose is clear, and if a plan A fails, then you cannot do it or alter it. You have to go to plan B. Remember. Okay, so remember here. Now what is the strategy? It is the blueprint. Strategy is simply blueprint. It is a layout, it is a design, or the idea used to accomplish a specific goal. Now strategy is very flexible, open for the adaptation and change when it is needed. Strategy is the most useful when the creativity, collaboration, innovation are the utmost importance. So whatever the strategy you are having, you can modify it, you can improve it, you can alter it, but the whatever the plans you are having, right, you cannot going to modify it. If plan A fails, you have to go for a plan B. You cannot change, alter the plan A. But strategy, if one strategy fails, you can modify, you can update the strategy. Okay, so basic difference is the modification, alteration. Plans cannot be modified, right? But the strategy can be improved by the way of modification. Now what do you mean by strategy? Again, the purpose of strategy of an organization is obviously maximizing the advantages and minimizing the disadvantages. Simply anything, you will have to increase the advantages and decrease the disadvantages. For example, see, even though the SBI Mutual Fund Limited, even though the SBI Fund Management, it was not likely to achieve its challenging objective of what? Achieving the number one position in the mutual fund by significantly increasing the asset and net profit in 2021 without making major changes in its strategy. So what do you mean by that? See, strategy means you have two objectives in strategy. You either maximize the advantage you are having or minimize the disadvantage you are having. Got it? This is the strategy. Now take example, SBI Mutual Fund Management. So SBI SBI Fund Management. Okay, so this company want number one position in the Indian market, but they are not able to achieve it. So what they have done, they have minimized their disadvantage. How? See, they have given the importance to investment, risk management, opening the new branches, and marketing strategy. So still, if they as they are not able to achieve the first position in the market, they have decided to another strategy, sub strategy, that is minimize the disadvantages. And what are that? They have increased their marketing, they have increased their branches. So these are the way where you can improve. Okay, so simply you can maximize the advantage you are having or minimize the disadvantage you are having. So SBI mutual fund want number one position, okay, but they are not able to do. So what is they have done? Their advantage is marketing, their advantage is they can open the branches. Okay, so see, they are having lack of branches. That is the disadvantage. So to minimize that disadvantage, they have increased the branches, right? So this is the way we have to deal. Okay, so simply understand here the concept in the strategy. The purpose, what is the purpose of strategy? You have to increase what is the advantage, that is the plus points of your, you have to decrease the disadvantage, that is negative thing. SBI mutual fund want to be a top, but they don't, but they are not able to achieve it, right, due to some difficulties. So they have decided to minimize disadvantage, like why, how? By increasing the number of branches, by increasing the marketing strategy. So in this way, you have to understand what the strategy is having two purpose, either maximize the plus point or the minimize the disadvantages. Now there are three different type of strategy. We are having three different types of the strategy: corporate strategy, then business strategy. So let's discuss one by one. Okay, what is a corporate strategy? It cover overall direction followed by the company. It tells about the company is to grow and managing its different business lines. It tells how company is going, how companies grow, how company is about to grow, how company is managing its businesses, product and the services. Corporate strategy may be classified under the three different category: stability, growth, and the retrenchment. Remember here, what is a corporate strategy? Corporate strategy means basically it is overall direction. Okay, and using the corporate strategy, we will come to know what is the business of that company, what are the product of that company, what services they are offering, right, and what are their plans to grow further. That is the corporate strategy. Now that corporate strategy have three different category: stability category, growth, and the retrenchment. Okay, so through example you will get it. So what is retrenchment? See, TCS for example followed a corporate strategy of retrenchment by selling its marginally profitable Tata EX accounting software business and concentrating on its highly successful consultancy services. Means what? You know, TCS, Tata Consultancy Services, right? So TCS, what the Tata has been done. See, Tata X accounting software. So this was the one of the sub branch company of the Tata. Tata sold it. Tata sold this company. Though it was profitable, but still they want to focus on what? Consultancy services. That's why they have sold the business of the Tata EX accounting software. Okay, so that they can focus on mainly consulting, and which is highly successful and profitable in India. Okay, TCS is the top software company in the India. Okay, in case of exports. So that is nothing but the retrenchment. Your business you are retrenching for gaining something, retrenchment. Now next strategy is a business strategy. Corporate strategy is nothing but the overall strategy. Business strategy means it would prepared at the level of business unit or the product and services. That means, see, corporate strategy is overall direction, but business strategy is for particular product or particular businesses. See, for example, corporate strategy, I will say corporate strategy means it will be applicable to all corporates, but business strategy is simply for simply one business or particular product or particular service. Got it? Now, it normally highlight the improvement in the specific industry only, because it is particularly for the business or particularly for one product. Okay, now see, a business strategy would be competitive or cooperative. There are two business strategy, you can compete or you can cooperate. So very easy. See, under the competitive strategy, company might try to differentiate its services, whereas for instance, see, Intel, which manufacture its computer microprocessor, has allied with the Microsoft and to differentiate itself from the AMD, which is its main competitor. So you know, so if you purchase the laptop, okay, generally Dell, okay, you will get the Intel processor, okay, they will have the logo Intel inside, like that. So they have their cooperation, Dell and the Intel, along with that Microsoft and Intel is having the same, right? So who is the main competitor of Intel? You know, Intel is the microprocessor, and AMD is also microprocessor company, and both are a very big competitor to each other, very big. Okay, so AMD generally used by the Acer. So friends, see what I have to tell, the competitive strategy. We are talking about the competitive strategy. So AMD is the microprocessor, is a competitor with the Intel. Okay, so they want to distinguish themselves, right? Because they have to compete. So Intel have done tie-up with say Dell. So Dell laptop will be having sticker like Intel inside. So they have to differentiate something, right? Now in case of cooperative, what is happening? See, a company following the cooperative strategy may form an alliance with other company. What do you mean by that? See, through example you will get it. Nowadays, I am talking about nowadays. What happened? See, Toyota. Now Toyota is almost going from the India, because they have stopped the manufacturing in the India. Now see, you know, you notice one car, for example, say the car of Toyota Glanza, right? So which is having utmost similarity with the Maruti car, Suzuki car, which is that this is Baleno. Okay, so what I have to say, the Toyota producing the cars, right? So with the help of a Maruti, only they are putting their logo and name different. Okay, so this is the cooperative strategy. They both want to grow, right? But they are doing the cooperation. So the Glanza, the car of a Toyota, is being manufactured in the Maruti Suzuki company. Okay, so this is the cooperative business strategy. Got it? Now what is the third is the functional strategy. So it refers to the approach adopted by the functional area by maximizing the productivity. For example, see the function of R&D and the technology. So you are increasing some functionality. So if you are focusing on the R&D, if you are focusing on the technology, that means you are focusing on particular function. For another example, say marketing function. So if you are focusing more on marketing only, so your strategy is functional strategy. What is the function? Marketing. Okay, so in practice, business entity may use all three types of the strategy at the same time. No problem, you can use. So what we have discussed? We have discussed the three types of the strategy. Corporate strategy, it is overall strategy, right? And it is having three. It is classified under three categories: stability, growth, and the retrenchment. Business strategy, it may be cooperative or the competitive, and the functional means one function you are focusing. It may be the like marketing. Okay, now what are the element of the strategic management? The strategic management has the following four basic elements. Okay, what are that? See, strategic management have the four elements. Remember, strategic management have the four elements. Okay, so first is what? Environmental scanning. Second is strategic simulation. third is strategic implementation, and the fourth is strategy evolution and the control. Okay, remember the four name, we have to discuss one by one. Okay, now see the context. Environmental scanning. What do you mean by environmental scanning here? So see here, environmental scanning, it refers to monitoring, evaluation and dissemination of information received from internal and the external environment. Got it? What is the environmental scanning? Environmental scanning means whatever the information you are receiving from externally whatever the information you are receiving, internally whatever the information you are receiving, you have to monitor it, you have to evaluate, and you have to disseminate. Okay, simply that is the environmental scanning. So it is very simple, you can get it by the name. Environmental scanning means whatever the information you are receiving from the surrounding, you have to monitor, evaluate and disseminate the information. Okay, that means basically analyze it. The information is provided to the key people in the organization with overall objective of the identifying both internal as well as the external strategy factor which impact the future of organization. So see, so there are some key people like HR head or the MD, CEO, so or board of directors. So these key people. So this is your organization. You are receiving, they will receive the information from different factors in the organization, and based on that information, that key people will take some decisions. Okay, that is the environmental scanning. Now, very important, we have discussed, very important is SWOT analysis. Now, what do you mean by SWOT analysis? SWOT stands for, first remember here itself, it is exam point of view, you have to remember strength, weaknesses, opportunity and threat. Remember, repeat, SWOT stands for strength, weaknesses, opportunity, threat. SWOT stands for strength, weaknesses, opportunity and threat. That is very, very important. Definitely you will get a question. Okay, in SWOT, W stands for, O stands for, like that. Okay, now it is the strength, weakness, opportunity and threat. It is one of the easiest way to conduct the environmental scanning. So remember, what is the purpose of SWOT analysis? In industry it is used at most level, but a very large SWOT analysis is being used. Okay, now it is used mainly for the environmental scanning also. Now see, strength and the weakness. So what is that? See, SWOT analysis means you are doing the analysis of what is the strength you are having, what are the weaknesses of your company, what are the opportunity of your company you can see in the future, and what are the threats. That means who are the competitors, that is the threats to the businesses. Okay, so now see, strength and the weaknesses form part of the internal environment of the organization, like a structure, resources, culture. Okay, so what is the strength of organization, what is the weakness of organization? It is internal part of organization, right? Like for example, organization structure, if you are having good structure, it is your strength. If you are having good resources, it is your strength. If you are having good culture, it is your strength. But the employee is having some ego problem, it is your weakness. So it is internal environment factor. Now see, the internal environment can be controlled by the top management in the short run because it is internal matter, but opportunity and the threat, these are the part of external factor. Okay, so strength, weakness internal, opportunity and threat are external, because whatever the opportunity you are having in the market you cannot control. The threats, that is the future damage to the business. Okay, these are the external factor. Now you can see these are also outside the ambit of the top management for the short term control. That means even management, that is top management, also not helpless here for the opportunity and the threat. Okay, because it is out of the ambit of the management's short term control. That means they cannot control it for the short term. For long term perspective they can think, but for controlling them opportunity and threat in the market, for short term perspective not possible. Now these factor could be a general as well as the specific factor. The general factor include the impact of the entire economy or the industry where. Okay, so means what? Simply opportunity and threat means, see, if there is a huge demand, if for example, if RBI reduces the repo rate, what will happen? Banks will decrease their rate of interest on the loan, so there is an opportunity to increase the advance, right? So what is the threat? Threat means what? See, suppose SBI is the giant in the banking, so SBI has reduced tremendously a vehicle loan and with zero processing fee, so it is a threat. So all our customer will go to the SBI, right? So this is threat to the business, so that we have to understand. Okay, now specific factor, so the impact of specific industry or some organization. So these are general factors. What is general factor? Like see, we are having two type of factor. One may be the specific or one may be the general. Okay, general factor means will impact the economy or the industry. For example, general factor means what? Like there is a recession, so it will impact all right. A specific means specific industry or organization, means specific industry. Like say if the Yes Bank, so Yes Bank has now uh, the situation in Yes Bank, so particularly Yes Bank is got affected, right? So in this way you can say it may be a specific, it may be a general. Okay, no need to worry about. But importantly, you have to remember the SWOT analysis: strength, weakness, opportunity, threat. These are the internal, these are the external. Okay, now see the strategy formulation. How to formulate the strategy? Strategy formulation require on the basis of a formation, on the basis of information gathered from the analysis, vision statement, and the objective. So how strategy you will make? Obviously you should have some information which you have collected by the way of analysis, by the of the vision statement of the company, and what is the objective of the company, right? Now see here, the vision must relate to the expectations of the customer, and vision gives an organization its energy. The vision usually require a leap of a faith and the act of the courage. So we are talking about the vision. So vision of a company, vision of your bank must be clear. Okay, so you have one work today. You search on Google, you go to the website of your bank, and see there what is the vision of your bank. Okay, vision must relate to the expectations of the customer, and it gives organization its energy. It requires the leap of a faith and the act of the courage. Okay, vision is optimistic inspiration. Vision is the optimistic inspiring picture that brings with the responsibility to make it happen. Vision is the dream of greatness. What is vision? In simple statement, understanding of what the firm will do in the future is the vision. Vision is forward looking and identify the desired long term status. A vision statement should be answer to the basic question: what we want to become. What we want to become. Whether we want to become top number one bank in the India, whether we want to become the most admired bank. So like that, what you want to become, that is nothing but the vision statement. A clear vision provide the foundation of the developing a comprehensive mission statement. Obviously, right? So many organizations have both vision and the mission statement, but the vision statement should be established first and the foremost. So there will be a question first: what you should, if you have decided to start a company, what is the vision of your company, what is the mission of your company? But you have to distinguish, right? And obviously what is vision, that you have to decide first, then you can go for the mission statement. Okay, so remember here, the vision statement should be established first and foremost. Ideally vision statement should be short, and generally it is one sentence. That is a vision statement. So you can see here, mission statement, it is usually vision. Now we will talk about mission. It is depicted as a starting point of the strategy planning process. Mission means you are some mission, you are on a mission. Okay, what is the mission? Suppose the soldier is on the border and they have mission to fight with the enemy or the opposing country's soldier. So there is mission, like a mission. So what is your mission? Our mission is passing CIB. It is mission. Okay, that means what? It is starting point in the strategic planning and the process, right? Mission statement. So mission, so you play the game, there are missions, mission 1, mission 2. So once you finish one mission, you will get other mission. But vision is a continuous long term process, right? So mission statement spells about the underlying motivation for being in the business in the first place, and the contribution to society that the firm aspire to make. So mission means it motivate you for being in the business. For in the game, see, you are at a level mission 1, mission 2. You finish mission 1, you will go for the mission 2. Okay, because you get motivated. I have done mission 1, now I have to do the mission 2, right? So mission statement is called as the statement of purpose, statement of the philosophy, or the statement of the beliefs, statement of the business principle, or the statement defining the business itself. Okay, a mission statement reveals what organization want to be and whom it want to serve. Mission statement should include 10 components. It may be the customer, product, service, market, technology, concern for the survival, growth and profitability, philosophy, self-concept, concern for the public image, and for the employee. Okay, so that 10 should be in. You remember that 10. Okay, because they may ask you which of the following cannot be a part of the mission statement, like that. Okay, so you here I have taken my example. Refer here. See SBI. Okay, see SBI. So what is the vision of SBI? Be the bank of choice for transforming India. And what is the mission? Committed to providing simple, responsive and innovative financial solution. So mission is for what? See, it reveals what the organization want to be and whom it want to serve. So they want to provide simple, responsive and innovative solution to their customers, right? And what is their vision? Vision is they want to be a bank of choice for transforming India. So what is the vision statement? It is a leap of faith, act of courage. It is a dream of greatness. So their dream is to bank of choice, transforming India. So you see, vision is very broader sense. It gives you feeling of greatness. But mission is what? It is more practical, because here more specifically stated what you have to do. Okay, so here through example you have to get the difference between vision and the mission. Vision, be the bank of choice for transforming India, and mission is to provide the simple, responsive and a financial solution. Mission means what you want to do, and mission means you have to become. Okay, right? So in that way you can go with mission and the vision. Now strategy implementation. What is strategy implementation? What you decide the strategy, you implement it, right? Simply see, strategy implementation, the process of executing the strategy. So how you execute strategy, that is implementation, right? So successful strategy and the development on effective implementations. Okay, so simply successful strategies are dependent on the effective implementation. So if you implement the strategy, then obviously it will be successful. Strategy implementation is the fine art of dealing what is to be done, when it to be done, that is when with the various tasks to be performed and where to be performed, how they are going to be performed. So what, when, where and how. So when you got answer to this, that means you are implementing the strategy. Okay, now strategy evaluation and the control. So obviously once you have strategy, you start implementing it. Okay, that means executing it. So on execution, while execution, you should evaluate what is strategy you have, what control you can do. For example, if you have some strategy to pass the CAIIB examination, okay, you have some strategy like daily 2 hours you are studying, but what happened on Thursday, there is one your favorite serial which you watch on Netflix for 2 hours. So how it will work? So you have to evolve your strategy and you have to do some controls. Okay, it's very simple. Strategy evaluation is a logical step to obtain feedback from the strategy performance, taking the corrective action if needed. In the light of the external and the internal changes, strategy evaluation is needed because success today does not guarantee the success tomorrow, right? That's why evaluation is important. Okay, very easy. Now there are some phases of the strategic management. So remember the name General Electric, very big company. Apart from that, Boston Consulting Group, big company. They have been instrumental in developing the concept and the technique for the strategic management. See, in 1980 around, they have started working on the strategic management. So they have implemented some strategy in their company. Now that become the techniques. Very simple, right? A business entity normally develop its strategy in the 4 phases. So what are that 4 phases that we will discuss? So remember here 4 phases you have to understand. First is the budgetary phase planning, basic budgetary planning. So generally business entity do budgetary or the financial planning. generally on the annual basis, right? Even our financial budget of our India, we are it is announced recently, annual budget, right? So manager or sales manager put their view on the changes in the business environment, right? In this, not much analysis is conducted, and source of data is also confined to the internal sources only to a large extent. So this planning takes more time, and it is the best. It is the elementary form of the strategic management. So what is basic budgetary planning? See, first remember, it is annual. It is annual. It takes more time, and it takes data from its employee, or you can say manager and sales manager. Okay, and that's why we can say limited data is they are having. Okay, and it is very basic or the elementary form of the strategic management. Okay, so what is basic budgetary planning? Simply you do the budget, right? Everybody does the budget, like that they do the budgetary planning annually. The company also do that. Okay, and they involve the sales manager so that they can review the environment. Okay, apart from that, it is very basic and the elementary, and also the best. Why it is best? Because it is traditionally is being followed, annually budgeting. Okay, so it is very common thing, annual budget. So basic budgetary planning. Okay, very easy. Now second is the forecast based planning. Forecast based means what? Simply see, annual budget is generally only for 1 year. So previously we have discussed that is what for annual. Annual means only for one year. But if you have to consider your organization for long term perspective, annual is not sufficient, right? So project having a term longer than a year, say 3 to 5 year, is to be considered and should go for the forecasting based planning. So however, this phase also need to be managed time to time to ensure preparation of the forecast in the scientific manner. See, extrapolation technique means what? What is extrapolation? Means understanding the known data from the unknown data. Understanding the unknown data from the known data means what? See, you have some known data, means what? You have some suppose these figures. Okay, this year, next year, this year, next, these are the figure of sales in the year, say 2015, 16, 17, 18. Okay, so you, based on that, you can forecast the growth in next year, like the same thing. Okay, so very simple now, right? If you have this curve, right, so you can predict that this curve will go like that, so you can predict the position here. So simply understanding the unknown data from the known data. Now like equations, like you have discussed in the time series, right? So there is a competition among the manager to get larger fund allocation for their area of operation. So here quality manager will say I want more fund, marketing say I will want more fund, like that. There is competition because it is long term project. It is long term. So lot of time is also spent on the meetings because it is long term project, right? Evaluation need to be done, so repeated meetings. So what do you mean by forecast based planning? So simply remember one word only, remember: basic budget, annual planning, forecast based long term planning 3 to 5 year, long term planning 3 to 5 year. Now externally oriented strategic planning. In certain cases, because of ineffective 5-year plan due to internal politics in the organization, top management takes the external help. Okay, now we have discussed here up to 5 year you can go for the plan, right? But here if you need a plan which is more than 5 year, or if it is the 5-year plan is ineffective, then the management can go for the external help, and due to the internal politics management go for the external help. Now see, the strategic planning is withdrawn from the managers at the lower level and it is centralized at apex level. Okay, why? Because we are taking external help, so we are not taking data from lower end or the lower level, right? So assistance from the outside consultancy is taken. The approach is top to down, obviously top to down, because lower you are not going to consider the lower level. So it is a top to down approach. Top level they will decide and they will impose it on the lower hierarchy. It is led by the top in-house planning experts. The formulation of the formal strategy by top executive and implementation by lower level manager. So what is here? Strategy will be formed by top executive, but implementation will be done at the low level, Okay, that is nothing but the top down approach. The plan is typically prepared for a 5-year period with the help of external consultant, but the very less contribution at lower level of manager. Okay, very easy. So here remember, first budget, basic budget annual, forecast based 3 to 5 year, and generally external or the strategic externally oriented planning generally is for a 5 year. Okay, so or 5 year plus. Okay, so fourth is what? The strategic management. The general elective is considered as the most pioneer in the strategic planning, right? The implementation, evaluation, control of a strategic plan were accorded due to the importance. Also to note, perfect planning or the forecast is not possible. Okay, if you do whatever, you do implementation good, you do the evaluation good, you control the strategic plan, whatever you do, but we cannot say that the planning or the forecasting is perfect. Nothing is perfect, right? So instead of having the annual plan, strategic plans for longer term of a 5 year were introduced with a continuous review for short interval. Okay, so instead of going for the annual plan, only a strategic plan we will have strategic plan. Okay, for long term we will have, say, for 5 year. Okay, and we will continue review it for shorter duration, say quarterly, say monthly, like that. The external consultant to help to develop strategic plan came into picture. The strategic management therefore become the more broad based role of a top management is now slightly diluted because of the planning is now no longer remain the top to down approach, because it become more and more interactive. So see, it is in the recent year we have discussed here the external, this is the top to down. Okay, but here if you talk about the strategic management, now it is no more top to down approach, and it is become more and more interactive. Okay, so suggestions from the lower end, their feedback, their environment, feedback about the environment, they have to be taken care. Okay, so this is the strategic management. Now what are the benefit of the strategic management? So obviously it deal with the performance and the growth over a longer period. Okay, so friends, see here, what are the benefits of the strategic management? It deals with the performance and the growth, right? The three most important benefits we have to see here. The management gets clear sense of the strategic vision of the business entity. Manager is able to clarify the focus on the strategically important issue, right? And the dynamic environment that can be better understood by the management. Okay, these are the three most important benefit of the strategic management. Simply, now the importance of the strategic management. So what is the importance of the strategic management in the banking and even in the finance industry? The strategic planning is given a lot of importance. Strategic planning, the process of determining what business should become and how it best achieve that goal, is particularly effective at identifying the new opportunity for the growth and ensuring that all managers have the same goal. Strategic management is crucial for the success of an organization in long term. Okay, so why it is important? Obviously, if you have to sustain for long term, you should go for the strategic management. Now the business environment analysis. A business does not operate in isolation, right? It is to succeed, the management must understand the environment of the business, the operating environment of the company, like suppliers. Who are the suppliers? Who are the customer? Who are the competitors? Okay, so that is nothing but the operating environment. Okay, now therefore the operative, that is a manager, is able to analyze. Therefore imperative, therefore imperative that a manager is able to analyze, understand and appreciate the business environment in which the organization operate. Okay, as mentioned earlier, SWOT analysis help in a lot in such a situation. So business environment means what? Simply, who are your customer, who are your supplier, who are your competitor. So these are all surrounding your business. So this is simply the environment, right? Now what do you mean by SWOT analysis? We have already discussed strength, weakness, opportunity and threat. That is SWOT analysis is very helpful in such a situation. Now let's come to the summary part, what we have discussed. The management is the process of what? Creating an environment in which help individual who work in the group to achieve the business goal established by the various stakeholders. So what is management? So we know the functions of management. It involve planning, organizing, staffing, directing, and the controlling. We have discussed the different approaches. Classical, that is also called as the traditional. Neoclassical, that is also called as the behavioral. Quantitative school, it is also called as the management science. System school, contingency school, it is also called as the situational school, right? And the contemporary school. So that we have already discussed. Now today management is facing a lot of challenges. For what challenges? Data explosion, competition, technological changes, employee management, impact of globalization, and the environmental sustainability, etc. The strategic management has assumed a lot of significance in the modern times. The management need to have a long-term strategy to achieve the success, and business environment analysis plays a vital role in this regard. Now see the questions. Okay, so see here first, which of the following function of the management take care of the reporting structure? So who take care of the reporting structure? Planning, staffing, directing, it is the organizing. So organizing takes care of the reporting structure. Okay, which of the following school of management focus on the motivation? Focuses on the motivation. So quantitative, no more motivation school, or the contingency school, no. Then neoclassical is also called as the behavioral. It is the behavioral, so it focuses on the motivation. Now next, which of the following statement is correct? The workforce should be given any target or the slogan or exhorted to achieve the production level without devising new model. So it is not a good statement. It is not a correct. The practice of workforce should not be given target, right? The practice of considering the price as a criteria for awarding business contracts should be introduced. So it is also wrong. We have discussed that the that practice should be stopped. That we have already discussed, right? So there should not be minimum price bidding, right? Bidding should be based on the quality of work. Fixing arbitrary production quota for a workforce and a numerical target, so it is also a wrong statement. There should not be a numerical target to the workforce. The barrier to the pride of workmanship as well as the annual rating or the merit system should be removed with emphasis on the improvement in the quality. So this is the positive and the correct statement. There should not be any merit system, there should not be any rating, so that can demotivate the employee, right? So this is the correct, you have to mark. Okay, so last D is correct. So you can see if they are asking correct statement, you can say, go and you can sense the statement negativity. Okay, so positive statement you can mark correct. A learning organization is important. Why a learning organization is important? See, it helped an organization to control the cost. It make employee the best in the industry. It help manager to impose their view on the subordinate. It increase the effectiveness and the efficiency of the organization. So it is correct. Just simply read it, you will get the vibe of positivity in the option. So in this way you can also go through it. Now a digital gap can give rise to. So see, this is the negative statement. Digital gap give rise to something is going to happen negative, like so technological innovation. So it is not higher profit, inequality, improved operation. So obviously due to the digital gap, your inequality will be increased. Okay, so in this way you have to discuss. Okay, so see here, a digital gap can give rise to. So see here, a digital gap can give rise to technological innovation, inequality, higher profit, or the improved operation. So you can see here, digital gap can give rise to technological innovation. So answer will be here B, inequality. Okay, there is a gap in the digital. Okay, you can simply say it is not the improvement in digital, it is a gap in digital. So obviously answer will be negative, so inequality. Got it? So in this way you have to go with. Okay, you have to read the question, you have to sense the negativity or the positivity, and based on that also you can mark the answers. Okay, because this is complete theory. If you understand the things, then you can mark it. Okay, so here we'll stop. You have to subscribe our YouTube channel Banker Zone. On the YouTube, you are advised to download the application from the Play Store. Okay, the app link to download the application is given in the description. Banker Zone application, Android application. This you can join for the discussion. Okay, the name of the group is Banker Zone, CAIIB Banker Zone. It is available on the Telegram. For that you can directly search at the rate CAIIBBZ. You can join our Telegram channel also for notes. The name of the channel is Bankers Zone Official. You can directly search at the rate Bankers Zone JIB CAIB without space in the Telegram. Okay, so thank you friends. We'll continue our discussion in the next module, next chapters.